This is Eric Mwathe with Mwathe.com with the weekend market analysis for June 13th and June 14th, 2020. Let's begin here with the markets with about 20 minutes to go before the end of the session. This is how the market is trading. Market's been slightly down for the day, and I think at the highs was up as much as 700 points, give or take, in what has been an interesting week. For the week, if we take a look at where the Nasdaq is trading for the week, we can see that for the week right now, the Nasdaq is down about 3%. The S&P 500 for the week is down about 5%. And for the week, the Dow is down about 6%. And by the way, as we come to the middle of the trading month, we can see here that as of right now, the Dow is still positive for the month. The S&P 500 remains slightly down for the month, about a percentage or so. If you take a look at the Nasdaq remains positive for the month. So these monthly charts are going to play a big role into the overall momentum. So those who know how to follow the long-term charts also need to pay attention to how the formation of the RSI looks like as far as the monthly charts are concerned. Let's begin here with the Nasdaq Weekly chart, where we can see that the Nasdaq, as of right now, is showing a failed weekly breakout. This is exactly what the bears wanted to see. So as long as the Nasdaq is below the prior all-time weekly closing high from February of 2020, and let me give you that price. It's 9731.18, and again this goes back to this weekly closing high. So as of last week we were breaking out, but now we are seeing the market showing a stalled breakout attempt, and like I say, this is exactly what the bears wanted to see and what the bulls did not want to see. So again, as long as we are below this price, it is a failed breakout. Remember, failed breakouts are notorious for taking markets lower. As we can see here, a good example of this, where we had a failed weekly breakout as of late 2018, and because of this failed weekly breakout, we had a pullback towards the end of 2018. So if the bulls are truly in control of the market, then they need to recapture the 9731.18 level and hold above it. Now this is as simple as it gets in terms of the breakout price. On the daily, there's also another number to watch, which is the prior daily closing high, again right here from February, and that is also another level to watch for market health. So right now the market is trading below that price level, and that price level, the prior daily closing high, was at 979817.18. So this is a failed breakout on the daily, and just by itself is a red flag. So in other words, it's gonna take a recapturing of that price level to fix things here. As of right now, this is a red flag, and as long as we are showing this failed breakout, momentum net does seem to be indicating lower prices in the short term.